reversal setup system would look like. You can actually, let's actually do the same thing for IPOs. So here's DD as forming a potential entry. Here's Fox broadcasting. Here was your reversal IPO reversal setup back here. Here was DocuSign pullback setup, a shallow pullback setup. This was Roku, we looked at recently. Chewy, it's a pet something or other, pet supplies. Again, trend channel, like combo 2 reversal setup. Again, a pullback setup. Aventor, again, combo 2 reversal setup. Forming a pullback setup now. This is Peloton in the news. Here again, combo 2 setup. Potential entry here. Target area here. Another pharmaceutical stock. Other stock. Perspective we looked at, etc. I mean, you'll see, like I said, hundreds of these things all over the place all the time. And you'll get used to drawing these trend channel lines all the time. And then you'll see these setups. So with that being said, it's actually kind of getting late. Does anybody have any questions? I've kept you about a half an hour over the time limit. Is there any particular stocks anybody wants to look at? We can look at them if anybody wants.
Please type them into the Zoom chat room. Okay, we got a question. It says, Voss, can you attribute the setups and the pivots in your charts to some kind of human behavior or even an algorithmic trading?
I don't know. Good question, but I don't know why this works. It could be algorithmic. It could be human behavior. I just don't know. And Al Brooks often says, keep in mind, this is not my setup. It's from Al Brooks. And Al Brooks often says it's built into people's DNA. But I don't know if that's true either, because I don't know. The plain answer is I don't know. It just seems to work, and it works really, really well. But I just don't know. Sorry, I don't know. I don't have a better answer than that. It just seems to work really, really well. But one thing I will say is that people who know this, they trade it really well, and you can see it, and you'll see it live, especially when we look at intraday charts. You will see where the traders are coming in. And if you did not, let's go back to the QQQ again. Actually, here's another thing I want to talk about, maybe if you have time. Here again, let me go back. Which one were we on? 5. Again, you'll start to see this. And if you did not know about trend channel lines, all of these turning points are going to look like random to you. It's like, oh, the market turned at 11:30 today. Oh, it was just random. Or, it just turned willy-nilly because traders came in, or there's no advanced knowledge that it was going to turn at this particular point in time. Or the bar a couple of days ago, this big red bar at 10 o'clock, like, wow, there's supposed to be a breakout and continuation of a breakout. Instead, it got sold off. You would not even know that what was going on if you didn't know the concept of trend channel lines. So this is a huge, huge benefit. Once you master this, and you'll start to see it, and the whole market will start to make sense to you. And then you'll start to anticipate these turns before they happen. Like we're anticipating a move up tomorrow morning. And it may not move up, but at least your bias is towards the upside here rather than the downside. Likewise, the bias yesterday at the close was a bias to the downside, not to the upside. So those kind of things, when your eyes are focused on the structure and you know how these things, the markets turn, then you say, oh, it starts to make a lot more sense. Actually, along with that, I do want to say one thing is oftentimes when these things fail. So here's a case where we had trend channel lines. Keep in mind, our focus is primarily on pullbacks. So reversals are low probability. But one of the things we want to watch is when a trend channel line fails to turn where it's supposed to turn. So here's a trend channel line from here, connecting this dot to this dot. So back in August, we were expecting the market to turn down around the middle of November. So, but it didn't. It just kept going up. And then as it kept going up, it formed another trend channel line from here to here and here. And here's a spot it should have turned, and it didn't turn. So whenever you notice something anomalous, meaning it's a place that should have turned, but it didn't turn, there's a high probability that it'll come back to test that area again. So one of the things we talked about way back in November of our meetup is that, hey, it didn't turn there and it kept going up. There's a high probability it's going to come back and test the spots that it was supposed to have turned at. And oftentimes these turns will happen extremely rapidly. So you can actually start marking these off. In fact, this particular box here I put this on back in November because I said, this is a test area. This is where it was supposed to have turned. It didn't turn. Chances are it's going to come back and test it. So how did I know back in November that this was a potential test area? Not that it had to come here, but it's a likely area that it could have come. Likewise here, this is a potential test area. So these are the things that come into your mind once you start to know price structure and how trend channel line overshoots work, and where are the spots at which it could potentially turn, where was it supposed to turn but it didn't turn, where are my high probability trades, is it a low risk entry, is it a good stock, is it a big winner stock, are the fundamentals good, etc., etc., etc. All of those things come into play once you know how price structures work, especially with trend channel lines and trend lines, and you don't need indicators anymore. You don't need anything else anymore. All you need are these simple lines, which cost you nothing, and just your knowledge and the fact that somebody told you about them. That's all you really need. And lots of practice. You just need lots and lots of practice being able to get these lines on and to identify these overshoots and things like that. I hope that answered somebody's question. Any other questions?
There is one here. It seems like a fun, interactive learning experience, useful to learning market and chart mechanics.
Absolutely. In fact, very good point. Yeah, actually, Warren had INMD. A very good point, because once you start to learn the structure of the market and how these things work, it actually becomes fun. This gentleman, whoever is Tiger, he nailed it on the head. It's no longer a mystery. It's no longer randomness. It's no longer willy-nilly. The market just turned because it turned, or it turned because of such and such news. It's the virus that caused it to turn, or whatever. It just becomes structure, and when you can start to nail things down, and when you start to make money doing this, then you say, I can understand this thing, and it actually kind of becomes fun. And when it becomes fun, you will start doing it more regularly, and you'll start to manage your positions, and the whole thing becomes an interesting thing rather than fear and randomness and all this other emotions that come by. So Warren mentioned INMD. Now, this is actually a very good example. INMD is actually an IBD New America stock from back in November, which is right back here. So if you're an IBD trader, chances are you would probably have bought this breakout on new highs, either this bar or this bar. They call it an IPO breakout, possibly maybe even here. So you might have made some money on this thing, but a better entry rather than buying that breakout, is to wait for that pullback. So your first pullback was right here when you had this dot, and you pulled it forward. Now you're still waiting for a green bar to go above the high on. So you could possibly be here, and you would have been here with your stop under this vicinity right here, possibly at this gap spot here. Or you could wait for a better looking green bar right here. Somewhere in this vicinity is where your trade entry would have been. And you could possibly take some profit from here to here, which should have been maybe 5%. Oh, actually 30%. Wow. So this moved from 39 to 50. It didn't seem like it was that much. Okay. Well, anyway, this is a nice 20, 30% move from here to here. It doesn't seem right. It's actually 30%. Or again, it's forming another potential entry right here. So here's an entry. So here we don't have a dot here, but it's still, we can still use this as a pivot, extending it forward. And what is it telling you now? It's actually a potential trade entry. And we've got a inverted hammer pattern, one of my favorite patterns, setting up right now. So what we would be looking for is a strong reversal bar, and we look to go long above the high of that bar. So actually we do have a strong reversal bar right here. So we just need to wait for an entry above the high of this. Somewhere along here is where you would enter long, and we would target these areas here as initial profit taking spots. And not that you have to take the profits, but you can continue to hold if need be from then on. But this is a nice entry. So if Warren picked this, Warren, congratulations. You got a nice stock. It's an IBD stock. It's actually a phenomenal stock because they've got this thing where you can do this, how should I say it? It's like surgery without surgery, if that makes sense. They allow you to do facial reconstruction without doing real surgery.
Yeah,
very, very appealing.
Boss, Warren says it was a Kramer pick.
Oh, okay. Gotcha. Okay. Oh, very good. So that's something you want to watch for. This is an example kind of stock. So one of the things I do, especially for recent IPOs, is I'll often put the name of the type of stock it is and what they do. And if it's an IBD stock, I'll put it up there. So this way, when I look at a particular stock, let me just go back up here to my IPO list, I kind of know what they do. Like each one of these guys, I kind of know what they do. I don't have it all over the place, but I do usually have it like this one. So I know like Aventura is a company that was established in 1904. So it's not a company that's going to go away quickly. So if I do get a low risk entry as it is setting up now, so that's a potential nice entry. And it's a $9 billion stock. So the other thing I do, I'll also put if they pay a dividend. So especially for your dividend portfolio, is it not only is it a strong fundamental stock, does it pay a good dividend, and is it a good entry? So oftentimes what you can do is you can combine